Good afternoon. Welcome to the Bermuda Tech Summit 2020 edition. Unfortunately, due to COVID, we are doing this remotely, but I'm very pleased to be joined by just an amazing panel. I have Michael Casey, Chief Content Officer for CoinDesk, who writes the Money Reimagined column. Really pleased to have you joining us, Michael. And his column is definitely something to check out if you want to know what's happening with money as we go forwards. Henri Arslanian, Global Crypto Leader for PwC and host of the Crypto Capsule video updates. If you're not watching those, you should be. Jill Richmond, co-founder of Jewel Bank, so a digital native bank that is being formed in Bermuda and something we're very excited to see happen. Philippe Bekhazi, the CEO of XBTO and crypto market making firm, and Stablehouse, a global stablecoin exchange that recently launched our stimulus token pilot. So really pleased to have you all here, and thank you much for joining me.
Thanks,
so
Robin.
Just to kick things off, I kind of wanted to start by talking about the changing nature of digital money. And I'm hoping, Michael, you might be able to jump in and give an intro of where you see, because you've reported on many years the traditional finance system and have now taken to telling the story of what's happening in the current financial system or the upcoming one. And what are some of the activities that you're seeing that are really encouraging around how digitization of money is impacting society?
Yeah, well, first, Dennis, thanks so much for having me. It's a great pleasure to work with the wonderful people of Bermuda. You've been doing, some incredible work driving forward with your own innovation. Look, I mean, I think it's a really exciting time, precisely because we've gone from, crypto as being this fringe concept. Bitcoin is now, it's more than 10 years old, so it's been around for a while. But something as disruptive as this was always going to take a long time to get traction because it's up against lots of incumbent resistance. But at the same time, the fact that central banks are now experimenting with CBDC, central bank digital currencies, at the same time that we are seeing the emergence of privately managed stable coins, and I would say some really phenomenal experimentation, as crazy and wild westy as it is in what's known as the DeFi sector, the decentralized finance world. It really does feel like, writ large, we are at this turning point. And the fact that it's also coinciding with some fairly big, I would say, geopolitical and global economic challenges as a result of the COVID crisis and a whole host of other things means that, yeah, we're at this transformation. Now, I think one of the things that I've been most interested to see, just to cherry pick a few things that I think are worth noting. One is the rise in the use of both stable coins and native crypto like Bitcoin in the developing world. The COVID crisis has created a dollar shortage that was met very aggressively by the Fed as it pumped massive amounts of liquidity into the global banking system. But that solves problems for large banks and others in Europe and elsewhere that desperately need dollars to sort of match their liabilities and sort of maintain stability in the system. But the knock-on effects of all of that around the world, that where the dollar continues to be this important part of day-to-day trade, meant that you really created crises, particularly in places like Nigeria, where there was an oil, the collapse in the oil price created a huge problem. And lots of other really sort of difficult places that have been hit hard by COVID found that really crypto solutions, be they stable coins or Bitcoin, became really sort of necessities to manage sort of payment challenges and just literally keep kind of money flowing in the system. It's not to say that those systems have taken over, but you've really seen an interesting uptick. And this is happening at the same time, as mentioned, as CBDCs. Obviously, the moves that China is making are really important because it is, on the other extreme, a very large superpower that is aggressively innovating in this space. And the thing that I think is most exciting or most challenging as well about China's introduction of this is the notion that we are for the first time entering into a world of programmable money. I think a lot of people misunderstand that digital currencies are truly quite different from digital money. The idea that people say, well, we've already got Venmo, we've already got, online accounts. Why is this any different? It's very, very different because for the first time, you have a digital bearer asset that functions as the money rather than just a portal into the underlying banking system, that it becomes a cash-like entity. And to me, that is what is the essence of this concept of programmability, because money now is a form of software. It can turn things on and off, and therefore be plugged in, if you like, into so many different challenges that we face, whether it's automated payments and supply chains, or whether it's actually sort of how we get our funding out to people in times of crisis. And the fact that China is doing this in parallel with the rollout of its blockchain services network, which is a system for essentially trying to take the blockchain as a platform for a whole host of initiatives, whether it's smart cities or judicial reform and a range of other things, and that the money is happening, the digitalization of its currency is happening at the same time, means that I think that you almost have this moment where we will be able to see, once it all comes together, how in fact this concept, this programmable money concept, and when matched with other blockchain services, brings us to this significant leap in efficiency, where the trust problem, the friction gets removed because of that. It'll have all sorts of problems and teething problems and all sorts of things, but those to me are the big trends. At the very same time that I think that the US dollar is not, its hegemony is far from guaranteed at this particular difficult juncture in US history. So you have a lot of forces at work that I think are setting us up for some pretty profound changes in, arguably the most important institution we have in the world, which is our money. So a big moment, I would say, at this time, Dennis.
Yeah, a tremendous amount of oversight or overview that you provided and insights there. And I think there's a lot we can unpack. I think you've given us a great starting point. And I know, Henri, you deal, since you're actually based in Hong Kong, you deal heavily with a lot of review on where countries are going. I think you have a kind of your finger on the pulse of what's happening in China and seeing where are they actually moving forward with this and how are they, and as well as what other countries are doing. Can you give us a bit of an overview of what you're seeing in the overall kind of CBDC space or government-driven digital currency space?
Yeah, absolutely. First of all, thanks for having me. I'm a big fan of Bermuda normally. It's where we spend a lot of our Christmas holidays. It's actually one of the few places where there's no Zika. Here you go, the Bermudan plug for all of you. So great to have you and be able to actually be with you all today. It's actually ironic. I remember many of our fellow panelists. I was with you all in January in Switzerland. And it's crazy how the world has changed since then. So Dennis, again, thanks for having us. So to answer your question on CBDC, absolutely. As Michael was saying, this is the most exciting time, I believe, in not only the history of finance, but in the history of money. And I feel that all of us are privileged to be the lucky generation who's going to see one of these material changes that happens once every other generation. So I think we're extremely lucky from that perspective, especially when it comes to central bank digital currencies, CBDCs that you just mentioned. I think just to put my professor hat on for a second, I think for the viewers who are watching this, it's very important to understand, when Michael was talking about Venmo, you may say, yeah, but Henri, I'm using digital payments all the time. I use payments all the time. I don't even use cash a lot. You're right, those are digital payments, but actually what happens is it's happening really using the existing banking system. So every time you're sending money, it's a kind of a plus or minus, it's a debit or credit from one institution to the other. What's really important to understand today, there's really two kinds of what we call central bank money. One of them is actually good old cash that you have, which is issued by the central bank. And second are the reserves that your bank is holding with the central bank. And actually now for the first time, we may have a third form of central bank money, which may be a CBDC. So it's actually a pretty big deal. When you look globally, there's a lot of activity going on in this space. So today, according to the Bank for International Settlements, 80% central banks are doing some kind of research or experimentation on the topic. There's different kinds of CBDC. Again, not to get into detail, but again, for your audience, there's what we call wholesale CBDC, which is between the central bank and the banks. Frankly, for a lot of people at home, this does not matter. You don't see it. It happens behind the scenes. It really relates to the piping of activity going on. What you need to focus on at home is what we call retail CBDC, which is kind of the digital currency that you as a public will be able to interact with. And on this point, Dennis, as you mentioned, Asia is where there's a lot of action. I would argue, I think generally when I look around the world, probably Asia in the broader digital asset space is, I would say, 9 to 12 months ahead of the rest of the world. When it comes to CBDC, Asia, particularly China, is years ahead. So you mentioned China. Just to put everything in perspective, China today is de facto cashless. Forget CBDC. You know, I used to live in China. Whenever I go back to China, I haven't been there the last couple of months, but literally I am unbanked. Why? Because as a foreigner and not a resident of mainland China, I don't have a Chinese bank account. So I'm not able to use WeChat Pay or Alipay and be able to use a day-to-day payment. And literally, I'm the guy that everybody hates at Starbucks or in a cab because I'm paying cash. China, since 2014, has been the People's Bank of China, the central bank, has been researching this topic. And really, they move very, very fast. They're actually now launching live pilots. I mean, again, just to put things in context, this is not little experimentation. This is playing ideas. There's actually pretty important volumes going on. Just to give an example, in the last couple of weeks, the PBOC has announced that they've done over $1 billion renminbi in transactions. It's around 160 million US dollars. There's over 3 million transactions being done using CBDC. Over 6,700 use cases, from payments to government payments, peer-to-peer, so on and so forth. And there's been over 110,000 personal wallets and just about over 8,000 corporate wallets. So this is not a small pilot. It's pretty serious what's happening, but it's not only China phenomenon. And we can talk about the pros and cons. There's a lot of whole debate about this, but I think regionally as well, there's a lot of action going on. Cambodia, I would argue, is launching one of the most interesting experiments when it comes to retail CBDC, where again, there's a problem there. A lot of people are using a US dollar, and actually the central bank wants to go against this. And then what are you having even at wholesale level, where you have actually between Hong Kong Central Bank and Thailand right now, very, very, very advanced activity. I would argue it's probably the most advanced in the world right now when it comes to wholesale CBDC. So a lot of activity going on, definitely an area to watch. And again, for a lot of the viewers at home, we will be one of the lucky generations who may see in our lifetime a third form of central bank money, and that's super exciting.
So thank you very much for that overview. And I think in the East, you see a lot of government-driven investment and research in this space. And I think more on the Western side, we're seeing a lot of private sector driven initiatives. And I think Philippe knows this space incredibly well as he's set up companies to help facilitate the movement of these currencies. And I think we just saw about the total value market cap of stable coins. So basically digital fiat in the private sector has surpassed 20 billion. Which is just fascinating. I think I'd love to hear Philippe's perspective on how does the private sector keep up if the governments are moving a little bit slow?
Well, first of all, thanks for having me. It's a pleasure to be here. I would have preferred that we were all in the same room chatting about CBDCs and stable coins and just sharing a good time. But look, COVID is something that we have to deal with. It's a reality. It's a reality also in not only a biological reality, it's also a financial reality for a lot of people. Not only has COVID created tremendous financial strains on people's wallets, at least some people, but it also has proven or shown that one could accelerate the digitization of finance, of payments, and this year, not to say that it has been correlated, clearly it has other parameters that's been pushing it forward, but stablecoins have, as you said, surpassed the $20 billion mark in terms of market capitalization. That's private money, privately sponsored stablecoins. So it has nothing to do with CBDCs, which are still in the early infancy of what is a CBDC. And you know, even the word stablecoin is still like, what does it actually mean? So what we want to, at Stablehouse, what we want to do is we want to connect all of these new forms of money, stablecoins, which basically is a representation of a dollar or a euro or a yen in a bank account at the most simplest level. It can mean other things, but let's just talk about fiat for a second, because this is what we're really interested in, at least at Stablehouse and in most of the payment situations. People want to pay with the money that they're used to, whether it's dollars, it's euros, it's yen. So at Stablehouse, what we've done is we have created it's sort of an exchange for people that are, familiar with the crypto sort of exchange ecosystem. But we've sort of focused on stable coins. What can stable coins bring to the world, and what can it bring to Bermuda in this case, with the case of the stimulus token, which is basically a stable coin, right? But it's going to be sort of pegged to a Bermudian dollar. It's going to be the same thing as a Bermudian dollar. But what we want to do is just cut the boundaries, simplify payments, make cash as old school as possible. Basically, remove cash from the equation. Cash is dirty. In times of COVID, no one really wants to be handed cash or coins. It's also just a pain to carry around, right? So, and when you think about it, you have to go to a bank, you have to pay the bank a fee to take cash out, and then that cash goes to a merchant and right back into the bank. So it's not really that logical in a way when you think about using cash, and it can be easily today with the technology that we have, we can easily replace it with a wallet, a digital wallet. So this is something that we've also built that can basically talk to all of these stable coins, these euro stable coins, yen stable coins, Bermuda stimulus tokens, and we can very quickly, very efficiently across the world pay for things, whether it be taxis or taxes. It has many use cases, as I heard Henri talk about. There's a ton of use cases. It'll be interesting to see how CBDCs interact with private money, that's these stable coins, because obviously central banks need to control their money supply. They need control of it, especially in a time where you have negative interest rates. And this is something that is not going away anytime soon, at least in my opinion. It's something that's taking over the world. In terms, when you're talking about negative interest rates, you're actually talking about taking money away from people's bank accounts at the end of the day, right? If it goes significantly negative, someone's got to pay for those interest rates. And right now, it's very difficult to do that with the kind of banking technology that we have. We need to be able, or governments need to be able to say, and programmatically say, well, today it's going to cost you 2 cents to hold your balance with us, or whatever. And so it's going to be really interesting to see how governments push those CBDCs on the retail customers, and not only on, as Henri was saying, also on the banks. And I think there's going to be, different countries will do different things, but at the end of the day, they will have to try to control that money supply directly in a retail way, right? So to know exactly where the money's going, where it's been, and to be able to charge interest rates, negative interest rates, if possible. So I guess to recap, I'm really excited about the stimulus token that we've come to design with the BDU in Bermuda, and we believe that in the same way as CBDCs, we're going to be able to airdrop money for people that need it, that people that don't have a job, that lost their job, and that need to be quickly compensated, and to be able to make such stimulus token local, right? We don't want to just airdrop some dollars that end up in Amazon in the US or someone that doesn't actually add any value. What we want, or what certain countries in the world, including Bermuda, want to do is create a token that actually gets used in the local economy, right? And makes the merchants, sort of participate and take advantage and see a benefit in digital money.
Yeah, very much in the way that I think we have seen with COVID. We want to be able to control where we can spend money so that it allows us to get money to the people that are hurting the most, I think, is the opportunity. And that's the reason for exploring this tech. And I think with the digitization of money overall, what we're seeing is the potential for us to move away from the idea that I even have to change the money that I use. If I travel to Hong Kong, do I have to get Hong Kong dollar? If it's digital, can I still spend with Bermuda dollars and have a seamless experience? Do I have to think in another kind of money? And that's where I think the interoperability question comes in. And there's a lot of excitement around it. With that, though, it raises the question of how does this change the focus and the role that banks have to play in this system? If governments are looking potentially at going all the way to the retail customer, will that disrupt banks, or is there potential for banks to play a key role in managing the issuance and creation and the technological complexity? Because governments are not necessarily experts in the technology. So thus, I'd love to turn it over to Jill and get some of her thoughts on how the digitization of money really affects banking and what role a digital native bank has to play in that. What does really a digital native bank mean?
Sure. Yeah, and I'll just echo what Philippe said. You know, I wish we were all here in a room together. And the last time I think we all saw each other was in Switzerland. But that being said, you know, I think there's a number of things to unpack. The first of which is, I think from our perspective, Jules' perspective, the role of banks, digitally native banks, and I can help to explain that in a minute. I think that we still see the role of banks in participation with government in a public-private partnership in rolling out CBDCs. Again, there are really great use cases that were pointed out, I think, in East Asia. I think the Bekhazi initiative is one that is particularly interesting to me in the way that public-private partnerships have worked in tandem, and the role of actual private banks in handling a whole host of issues that central banks shouldn't be touching around compliance and otherwise. As far as Jules is concerned, as a digitally native bank, we see ourselves as operating as the bridge between fiat and digital currencies. And what I mean by that is that we're still working and operating around legacy systems, enabling our customers, our core customers, to move money freely, specifically using ostensibly stablecoin rails, and being able to create cross-border seamless payments and settlements in near immediacy. And ultimately, we are as a digitally native bank here to support the entire digital asset ecosystem, most of those including exchanges, market makers, and otherwise, in their ability to be able to have core banking services at first, and then beyond that, being able to provide additional services, including lending and otherwise against digital assets.
So I think that segues into what Bermuda's approach has been. I think one of the big challenges that we have as a jurisdiction of 60,000 people, 21 square miles or 40 square kilometers, is that it's difficult for us to take a lead on choosing the right technology. Investing in CBDCs can be a big risk because it's hard to say, will we choose the right one? Will we end up being excluded? Will we be interoperable? So our approach has really been to look at how quickly the private sector is moving with this, and how can we embrace and support private sector innovation, and see where they can play in this. And I think that's where we announced last year that we were going to embrace one-to-one backed US dollar stable coins for payment of taxes, fees, and services. And we've now moved forwards with a stimulus coin issued by Stablehouse, and we're exploring additional coins being issued across a multitude of platforms to kind of create that environment to allow the private sector to kind of figure it out and show the path forwards, because there is only so much a government can really lead on without seeing what's the parallel, what can innovation create. And it's interesting, we've seen some parallel support from the EU with 5 finance ministers coming out to support bank deposit-backed fiat, and the Office of the Comptroller in the States providing clarity on banking one-to-one backed or bank deposit backed stable coins. So it's a question, are we on the right path by saying, let's embrace the private sector? And I'd open that up and say, anyone who wants to jump in, what are your thoughts? What do you think this industry needs? Is it a fully government-driven approach? Is embracing the private sector right? Which way are we going to get to the right path that's going to make the right difference or the most difference for citizens?
I'll jump in if it's okay, guys. And I'm not sure if I have an answer to that question, Dennis, but what I will say is that it's going to be very interesting to figure out where the lines get drawn between the responsibilities of the public and the private sectors. And I want to pick up a little bit on, well, first of all, to say that I really think that the framework you come out with is a really interesting and intelligent one, and largely for the way you described it. You just get the private sector is the ones who are going to really innovate in this space, and to give them the chance to do so. And I think that where this line sort of is going to get drawn is between the notion that the government sets the monetary policy, and the government, essentially backs and with its full faith and credit the underlying value of that of the currency which is denominated, but that all the innovation happens at the application layer with multiple different payment mechanisms and sort of middleware as well as to how the stability function, the burning. All that needs to happen in terms of token issuance and token redemption can be done through the portal of hopefully a variety of different private sector players to give people the choice and encourage competition, but that we maintain at that base layer this sort of core notion of what the money is when you are specifically talking about a traditional national currency stablecoin. Here's where it gets interesting though, and Philippe talked about it in terms of the idea that central banks will find this as an interesting tool with which to be more direct in engaging with monetary policy, and so that you can actually charge people for holding funds as a way to be more aggressive in terms of that stimulus concept. This is all happening, right? That monetary policy position is happening in the context of there now being an increasingly competitive currency environment, right? So Bitcoin is an option, so dollar stable coins are an option for people. So how central banks can calibrate their own policy making is in itself going to be put to the competitive pressure of a global marketplace in currencies that's never been as open as this before, right? This is Hayek's idea of a world where currencies actually compete. And will people look upon those otherwise well-meaning policies as some sort of, oh my God, this is like the sovereign clipping the coins in the old day. I'm going to dump that and go to this more stable Bitcoin or something else that I prefer. That's a really open question. And I think that it will be really important, and I think it could actually be a very a powerful, if you like, accountability mechanism for governments to offset that with all the other positive things that can potentially happen along the lines of what you're doing with airdrops and sort of targeted stimulus and everything else, right? If you get that policy balance right, then that may well be the way to actually sort of move this whole thing forward. But you will be doing so in the context of not only the competition happening at the private sector layer, but you yourself will be competing with this digital open currency model that the whole world will eventually be confronting. And that is where it gets really interesting.
Maybe just to add some of the stuff you mentioned, Michael, I think it's an interesting point, Dennis, because actually when you look at who's going to be winning out of, let's say you mentioned CBDC, right? Frankly, if nothing happened, look at the financial institutions. I'm not sure the financial institutions would benefit from central bank digital currencies, for example. I generally believe that if Libra was not announced in June 2019, this panel would not even exist. This whole conversation was generally catalyzed by what was happening with Libra that put pressure on central banks, and now they're actually pushing the financial institutions. I would argue in many regards, actually, that a lot of the central banks are way more knowledgeable and educated when it comes to CBDC than many of the traditional financial institutions. Because, I think practically speaking, yes, we can have wholesale CBDC, which again was the central bank digital currency between the central bank and the banks. Yes, that may reduce some of the costs for the banks. I'm not sure how much the public will benefit from it. But also when it comes to retail CBDC, there are some very practical challenges for financial institutions. For example, if they need to come in now with a rails for CBDC within the financial institution, those are a whole array of new additional costs, compliance costs, technology costs, cyber costs. They need to actually put in to implement something that will not necessarily bring them additional revenues. And by the way, there's a lot of systemic risk as well. Today, if I do not trust the banking sector at all, I can go to an ATM, withdraw all my money in cash and try to bring it at home and try to secure it. There's physical limitations to how I can do that, right? Whereas actually with a CBDC, it's pretty easy for me to move my money into a digital wallet in a couple of seconds and actually get completely moved out of the banking system. That being said, I think there's a lot of these practical risks that are coming into play, and that's going to take way longer than I think than we expect of when we'll have CBDC. That's why I think, coming back to some points that Michael and Philippe were making, the one area I'm watching over the next couple of months where I think it'll be very interesting to see the link between the private sector and the public sector will be stable coins. Because I think it's very easy for somebody to experiment it, to see. I mean, including myself. I just found out a couple of weeks ago I had to send money from Hong Kong to my family in Canada, in Montreal. And my lovely bank in Hong Kong doesn't do FX on the Sundays. So what I did, I sent to my sister stable coins. And I guarantee you, I mean, those stable coins are not going to be converted back to in the fiat ecosystem. They'll stay in the stable coin ecosystem. You mentioned before we're at 20 billion right now. I think we were at 10 billion only in May or June. I think that's one development we need to watch, because that can be very interesting to see the interaction of the private sector, public sector, and then the impact on policy making and for central banks of the impact these CBDC, these stable coins may have. So definitely short, medium term, that's an area to watch, interaction, and longer term, we can deal with CBDCs.
Yeah, I agree with you, Henri, actually, just to jump in. Stable coins really went to $20 billion this year, I think primarily because the sort of opportunity cost of holding a dollar stable coin kind of went to zero, meaning you could have your dollar in a bank account that paid you 1% a year, maybe 2% a year. And now you're not getting anything in your bank account. So what's the difference as a user to hold stable coins, right? Then rather than than putting your money in a bank account that's just sitting there. And where the bank can basically do whatever they please with it. At least with stablecoin, you tend to have more control over your money, and you're already in the digital world, meaning you can jump back and forth into Bitcoin or Ethereum or another stablecoin. As you mentioned, Henri, at Stablehouse, we're going to do FX every day of the week, every holiday. We're going to go the same way Bitcoin is, 365 or 366 day a year. So you'll always be able to send money to your close ones anywhere in the world, in any currency you want that has a stable coin or at least a digital rail to sort of land into. Of course, we're also connected into the banking system. We can always send it into a bank account. But of course, I believe that sort of banks will join the fund. They will become, and we've seen it with the OCC recently, they've clarified a lot of things. Things are moving, right? Regulation is sort of getting clarified slowly but surely. So I think what's going to happen is your current, and we've seen it already with Kraken, your current cryptocurrency exchanges are going to become banks, and your banks are going to become cryptocurrency exchanges. Effectively, you could get to it in two different ways. And but at the end of the day, anyone who really wants to be in that business of being a centralized custodian and exchange will be a bank. I mean, it's coming. I don't think anyone would necessarily disagree with me here, because why if everything becomes digital, whether through a central bank digital coin or through a stable coin, through a cryptocurrency like Bitcoin, what's the difference if you're doing the same duty, the same job as a bank for a customer? It doesn't make sense to have different treatments for different of these sort of these sort of banks versus digital currency exchange. These are just names, but at the end of the day, the services rendered are effectively going to become the same.
And if I can just, and if I may, I mean, this is really the role of where Jewel is going. Ultimately, we are a direct bank issued stablecoin. We treat everything as one-to-one on deposit. And we are building all of those services ultimately natively, as Philippe had pointed out.
So I guess there's a lot of discussion around the digitization of money, from you do the government route or the central bank route? Is it the private sector? Who are you going to face negative interest rates? Where are you going to get paid interest the best? I think one of the most interesting areas is to say what happens when we move beyond money to use the same tooling for other assets. And I'm not necessarily talking cryptocurrencies, but what happens when I can own a portion of my local pub quite easily, or my local coffee shop? Something that, look, as the average person, I might not understand Bitcoin, just as I might not understand investing in an insurance business or a big bank. But there are local businesses that I might support, local real estate, local investments that I would be willing to make. How much can the same tooling impact that? And are we really going to be focused on holding money so much as assets and putting our money to work, which is, I think, what central banks and governments are trying to do with monetary policy?
Shall we just I'll keep going in order? I'll jump in if you like. Always happy. Lots of exciting stuff happening, I think, in the way that slowly but surely other forms of value, assets, are being represented in this crypto environment. And interestingly, I think the most exciting stuff is happening in the public blockchain, Ethereum in particular type of environment, both in the areas of DeFi, decentralized finance, and what we call NFTs, non-fungible tokens. There was a lot of work being done around security tokens, as they were called, where real estate assets, for example, and other and shares and a whole bunch of other traditional assets could be tokenized. And I think that work is still going on, but that actually draws upon a lot of the architecture of the old system. You've still got custodians, and you've still got this legal framework around it. But in the DeFi world, where you have decentralized exchanges, so there's no custodian, there is this capacity to move one digital asset and trade it with another without relying on an intermediary in the middle. That's where the world you're describing, Dennis, gets really interesting, because it means that there's a kind of a blurring of the lines between money and assets. It will be a long time coming, but I can start to treat this much more liquid, fluid, tokenized value constraint, whether it is a claim on a particular insurance policy, or a piece of a painting, but it's a token that has some value to me, and it's a form of liquidity. It's a way that I can actually sort of more fluidly manage my finances. When that gets plugged in with algorithms and a host of sort of big data based market making solutions, we're already seeing automated market making in the DeFi space. I think you start to get, one day, right now it's very volatile, but one day you're going to find all this liquidity come in there, and people are going to be pretty fluid, right? They'll hold some in cash, they'll hold some in a Picasso painting, they'll hold some, in a claim against the Bermuda government of some sort that then is sort of like just shifted around. And it's going to be a really interesting price discovery process for the world. I think we're, again, a long way from that, but we're seeing the beginnings of this come up. What I don't know is whether or not the sort of more traditional approach to that tokenizing of assets, the security token concept, is how far that's going or will go. Maybe some of the other panelists have some insights into, say, what banks are doing to, tokenize bond issuances. So I know the World Bank's been experimenting with some of this sort of stuff, but I feel like we've been waiting for the big STO moment to come, and it hasn't quite happened yet. But I'm not writing it off yet. So that's it. That's my take on it.
But you raise good points
Yeah.
on DeFi, by the way, Michael. I think we have to address that. It's really, I think, for the viewers at home, decentralized finance, what Michael is referring to, is really the use of financial services without an intermediary. So the banking services you're able to get today without any decentralized players, which is very interesting, right? So there's borrowing, lending going on, insurance going on, even robo-advisory services. And I think what's really exciting, and it ties to what you're mentioning, Dennis, is, in DeFi, one thing that's very exciting is what we call composability, which is literally today in the banking system, every bank has its own offering. The regulators have been trying for years to have open banking, open APIs, force the banks to open up to let them to be able to interact with other fintechs who want to come in. With DeFi, that is by default. Literally, that's what we call financial Legos. You can take any DeFi offering there in the market, you can mix and match them and have the offering you want. It's open source, everybody can see it. And that, I think, opens up a whole new world in the financial services that we cannot even anticipate. What the last 2-3 months shown is that the experiment works. It's still very little. There's less than $10 billion in value locked. It's not the early days. But again, it shows that the experiment works, and that's super, super exciting. So DeFi, for anybody who wants to read about this on the weekend, decentralized finance.
Yeah, read it up. It's pretty wild and volatile at the moment, but it's the inklings of some fairly interesting stuff. Totally, you're on the right track, Henri.
Read Michael's text. He writes great articles.
Thank you.
Yeah, and when we think about it, the last 10 years, a lot has kind of happened in those big waves, right? So you had Bitcoin in the beginning, and then you had Ethereum with their ICOs, right? And they went through the roof, and then they came down. But what was interesting about the ICOs is that tokenization process, is that raising capital in a very sort of light, easy way, maybe a little too easy. And that's where sort of regulation came down, right? And here now we have DeFi, and now that's going through the roof, coming down a little bit as well. But I think these are the trends. The technology is here to stay. The way it's being used and regulated, that's still coming. And so it's, I mean, I look at it very obviously, I'm very close to DeFi because we'd love to connect into DeFi as a centralized entity and just take advantage of these pools of liquidity that are ever growing, right? And of course, it's creating strain on the underlying blockchain that supports most of these DeFi tokens, right? Ethereum has a hard time scaling at this point, right? And you're seeing things like people spending $100, $200, $300 to do one transaction on a blockchain, really showing that there's really a lot of interest in that. Now, whether or not it can be kept that way, probably not, right? I mean, it seems like this is like the early days. People are tinkering. People who are doing DeFi, by the way, are people who really know what they're doing, right? It's not for the faint of heart. It's still dangerous. Those smart contracts have risk. Most people don't read those smart contracts. They're open source, of course, but how many of us have actually gone through that smart contract and say, well, there's a huge, vector of attack right here. And so, but, eventually it'll be safe. It'll be like a little bit like Bitcoin, right? Where it's been tested and tried over years. And, not to say that there couldn't be any fatal flaw in Bitcoin, but the probability of having a fatal flaw in Bitcoin is much, 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 much lower than in, for example, sushi or one of those, spun up hard forks of a DeFi smart contract, right? That just barely has been tested and has been, developed in the span of a couple of weeks. But it's exciting, right? And this is how technology works and should work. And so we're really excited. And I think DeFi and stable coins, all these are not going away anytime soon.
Well, unfortunately, I think we've run out of time. I love the conversation, and I wish we had more. I'm hoping that you will consider coming back on if we do this next year, or if we do other sessions. I love getting the feedback and views. I'd like to thank you all for participating in the panel, and I would like to remind you all and our viewers tuning in that we are open for business. Our borders are open. You can travel to the island. We have managed COVID incredibly well, kept our numbers in the single digits. And we've also introduced a remote working regime that makes it really easy for you to come and avoid COVID. So please take advantage. Come and see us. Come and see me. and hopefully we can keep this conversation going in person. Thank you all again.
It's a good
Thank
sales
you.
pitch, Dennis. Definitely
Yeah,
up
great
that
sales
one.
pitch.
Thanks for having us.
Thank you, Dennis. Thank you.
Thank you.